Welcome, guys. Happy Tuesday to you. Today is August 25th, Tuesday, August the 25th, 2020. Welcome to another pre-market overview. So for those that don't know, my name is Becky. That's me there. Becky@tradewithufos.com. That's my email address. You can email me if you have any questions about what I covered today. There's also the support team. In fact, those guys being a team, it's actually better to email those guys just because they're definitely quicker at responding. Support@tradewithufos.com. We're all traders on the team, so always happy to help with whatever questions you have. Now, again, for those that might be newer to these, just to explain what the pre-market overview is, what we do. So what happens is every day, Monday to Friday, we send out a newsletter. Now, on that newsletter, we explain 4 of the major markets in the world in terms of the climate that they're in, meaning the trend or direction that they're in terms of how long we think that trend will continue, where we think price might turn, volatility, as well as high impact news that we need to be aware of. So we do the pre-market overview, this 15-20-minute video, just to expound on those concepts, explain how we got to those conclusions and show you how we use the technology on the charts. So if you want to get the newsletter for yourself, so you can go through the document as well for yourself every day, then the email address is newsletter@tradewithufos.com, and we will put you on that subscription list and you'll get it every day. Now, just a reminder as well, I always forget to point this out. See, it says here, it's like a little thing in the bottom right-hand side there, that we have an iPhone app. So you can go on the iPhone or App Store and look for You Can Trade, and you can see us on there under the App Store. Okay, a couple of reminders for those that are joining us from within the Tradective channel. Today is Tuesday, so we have stocks and investing today. Obviously, normally Mondays, Wednesdays, and Fridays is when we have the futures and option sessions, sharpening sessions over the weekend as well. Those are really crucial to come to if you can make it, guys, just because that's where we can expound on concepts and theory without having the pressure of needing to put on many trades. So you guys can ask your questions and sort of take your time to understand the methodology and the concepts that we're going through, rather than maybe get a little bit lost in the pace of what we do during the week. So definitely come to those over the weekend. Plus, one of them is a psychology session as well, which is psychology is highly underrated in the trading world. It's probably one of the most important things that we need to make sure we get our heads around. So coming to those psychology sessions are very useful. Now, in terms of upcoming live courses, next one we have is the trade plan class. That will be starting this Saturday, 2 p.m. Eastern. It's me taking that class, and we obviously go into making our trading plan, making it fit us as individuals, whilst also being as objective as we can with methodology. After that, we have a backtesting class, then futures, stocks, and psychology. So you see the dates there on the screen. Some of them start at different times as well, so just check out the timings. Now, I need to put the disclaimer on the screen there, so I won't read it because it takes a long time to read, but it is important that you guys look at it and that you read it. So you can mute me if you'd like to read it. Obviously, pause the video if you want to take a little bit longer to read through it. You can go to the website. You can www.youcantrade.com to get additional disclosure information from there. In a nutshell, effectively what we're saying is the videos that we go through are ideas and demonstrations. It's not trading tips or trading advice. It's an idea for you guys. It's showing you how we use the technology. And obviously there is a risk in trading as well that you need to be aware of. Again, you can look at more disclosure information on the website or come back and read that bit if you want to. Okay, now that we've done that, let's go and have a look at the newsletter, and we'll go through it bit by bit. So this is the newsletter we send out. And like I said, we go through 4 of the major markets in the world. We go through the S&P, which is one of the major equity indexes in the world. We have oil and gold, obviously both major commodities, and the euro as well. Now, the euro, when we look at it as the euro versus the US dollar, that is the highest traded currency pair in the world. A lot of volume moves through that market. In fact, the US dollar just by itself is responsible for about 80% of transactions worldwide every single day. So again, a lot of volume just in the dollar, let alone in the highest traded currency pair in the world, major equity index and 2 major commodities. So across those 4 markets, we've covered quite a lot of what happens out there every day. Now, of course, you might not trade these markets specifically, but I'm sure whatever you trade is going to have correlations to at least one of them because of the way markets work. Now, for each of them, we go through a daily time frame. Of course, different things happen on different time frames. If you trade higher time frames or lower time frames in this, things will be slightly different. The statistics and probabilities will be slightly different, but the daily does seem to fall within what most people do. Whether you're a long-term investor or short-term trader, the daily chart is very commonly used, hence why we use that one. Now, like I said, for each of these markets, we want to look at climate, meaning trend, what direction is the market moving in, but more importantly, what are the probabilities associated with that? We see that from our Auto Climate app. I'll show you how we look at it in a minute. We also want to understand propagating. If we're in an upwards trend or an upwards climate, how long can we expect it to keep going up for? If we're in a downwards trend or downwards climate, how long can we expect it to keep going down for? So with the propagating figures, what we see here on the right-hand side is what normally happens, how long that market normally goes, either up or down for, depending on the climate that we're in. So how long does it normally go in that direction? And where are we now relative to that? So it gives us the statistical probabilities as to what's likely to happen, and then tells us where we are relative to that. So again, gives us an idea of the statistics that are on our side, the probabilities that we may or may not have for a market to continue moving in a certain direction. Now, what we also want to understand is nearest UFOs. So UFO stands for unfilled orders. What we mean by that is where we expect there to be big stacks of buy orders in a market that can push it upwards, or big stacks of sell orders in a market that can push it downwards. We use our Auto UFO app to find that on a chart and show us where those stacks of orders are likely to be, which is where price is likely to turn. Once it hits buy orders, it's likely to go up. Once it hits sell orders, it's likely to come down. So we want to see where they are on the chart, where potentially these climates could turn and change direction. So we go through each of those for each market. We'll also come through and go through volatility for each market. Now, volatility just means how far we expect price to go within certain periods of time, or it could be seen as how quickly markets move. So we get the numbers from this column here, current implied volatility, and you'll notice each of the numbers here are a percentage. So what these numbers refer to are the expected movement up or down on these markets in 1 year. So it's an annualized number as a percentage of its current value. So it just tells us what we expect to happen in a year, either up or down, movement up or down, relative to its current price. Now, from that, we can figure out what we expect to happen per day, movements up or down in 1 day, in a week, movements up or down in a week, or in a month, again, the movement we expect up or down to happen within 1 month. Now, the current implied volatility numbers just by themselves come from the options of these markets. Now, options are traded by professional traders mainly, especially in these major markets is where we're going to have a lot of professional options traders. So when they're buying and selling the options and therefore setting the price of them, sort of inherent in what they're willing to buy and sell it for is the risk they are willing to take based on how far price moves or how far they expect price to move. So the current implied volatility numbers basically reflect a professional opinion in terms of the expected movement. Okay, so we're going to go through that one by one for each market. So climate, propagating, UFOs, and volatility, and then we'll come down and have a look at news as well. So let's get started. We're going to start with the S&P. So we're looking at SPX.X. That is the sign on TradeStation for the index. So I'm just going to move this a little bit just in case my face is covering up the numbers there. Okay, so on the bottom here, this is our Auto Climate app. So we're using technology here to understand the statistics and understand the probabilities, to analyze market data, obviously much quicker and more objectively than we can as humans, to give us probabilities and direction on the market. Now, it shows us this in one of three things. So either we can have a thick blue dot, that's what we see here. A thick blue dot means we have confirmed upwards climate, meaning markets moving up, we have an upwards trend, and that there are probabilities to the upside. It could show us a thick red dot. That tells us that we are on a downwards trend or a downwards climate and that we have probabilities to the downside. Or it could show us a thin dot of either color. Now, the thin dot, or the fact that it's thin, is telling us that there are no probabilities or less probabilities, less statistical advantage. The color still tells us the direction. Blue means up, red means down. But the fact that it's thin normally means we're going to choose not to do anything on those days, on those markets, because we lack statistical advantage. Here at Tradictive, it's all about putting as many probabilities as we can on our side, having a statistical advantage as much as possible, and again, using technology to help us be objective to find that statistical advantage. So in this example, we have a blue thick dot telling us we have a confirmed upwards climate, probabilities to the upside on the S&P. Now, when it comes to stacks of orders that we think could turn price, we have our closest buy UFO here. That's our green little flying saucer that we see there. And the numbers for that are 3294.61 to 3284.53. Now, there are no sell orders above us because we're at all-time highs. So we have no sell orders above us, no price above us. It can't run market data on something that's not there. And so we have no sell orders for the time being. So we show that here on the newsletter. Obviously, that's blank. Reason for that is we have no sell UFOs, so we can't give you numbers for it. Now, we saw that we had a confirmed upwards climate. We see that here. On the newsletter, if it's confirmed, then you just see it there as an arrow, either up or down, whichever way it's confirmed. If it's unconfirmed, like in these two examples, there's a little cross there. That little cross is just telling you, the newsletter's way of telling you that it's an unconfirmed market, less probabilities. So with the S&P, we have a confirmed upwards climate. Now, normally we would expect that the S&P would go up for 10 candles in a row. I'm just rounding up that second number. So everything that's on the right-hand side, I'm just going to round it up. So the S&P would normally go up for 10 candles in a row, and we are on candle number 18. So we are overextended, nearly twice overextended to the upside. Now, that's not to say that we won't keep doing that. Of course, things fall outside of probabilities. Just because something is probable doesn't mean it's guaranteed. So, of course, things happen outside of the statistical likelihood. But just bear in mind, the further we go past what is likely to happen, the less likely it is to happen. So, again, we are in a situation where we have buy UFOs beneath us. We have a confirmed upwards climate. Both are sort of signals there to the upside. But we are overextended there to the upside. So we lack probabilities that this climate is likely to continue. But at the moment, we have no sell UFOs to tell us where it might be likely to turn. So again, few things kind of maybe working against each other here. But again, just to bear in mind that we are lacking probabilities there for continued move. Okay, so in terms of volatility, we look at VIX.X or the VIX. And we see from that that professional traders' opinion is that we would expect a movement up or down in 1 year of 22.45%. Meaning we would expect in 1 day a movement up or down of 48.53 points. In a week, a movement up or down of 106.82 points. And in a month, a movement up or down of 222.37 points. Again, that's either up or down. Okay, so that's the S&P. We'll move on to the next market here, which is oil. We're looking at CL. That's the continuous futures contract for oil. So just load that. And once again, just move it a little bit so we can see our UFOs there. Okay, great. So on the bottom here, you can't really see it. And again, there's a reason for that. It's a thin dot, thin blue dot. Now, it's thin because it's telling us we have less probabilities, less statistical advantage. So again, most of the time, we're going to choose not to do anything on those days. So it's blue, which says that we have movement to the upside or we have an upwards trend, but again, unconfirmed, less probability, less statistics on our side. Usually choose to sort of keep away there. In terms of closest stacks of orders, we're kind of in the middle of nowhere, not close to either side, which is not surprising that we haven't really seen price do much because it's not really been close to either stacks of orders that could push it one way or the other. Now, what that does mean, though, is that price could shoot up or it could shoot down very quickly because we don't have anything in the way. We don't have orders in the way that could slow down that movement, at least on a daily chart. So bear that in mind. In terms of the closest buy UFO that we see at the moment, we see this one here. That's 26.31 to 25.80. And of course, it's just on top of another buy UFO there. They're just sort of nestled on top of each other. Closest stack of sell orders is here, 53.83 to 55.71. And again, we're kind of in the middle there, not close to either side. So we see that we have an unconfirmed climate. We show that there with a little cross. Now, normally, if it was to continue to move to the upside, so it is an upwards climate, but unconfirmed. If it was continued to move to the upside, normally oil would go up for 7 candles in a row, and we're on candle number 1. So statistical likelihood that that move to the upside is likely to continue moving upwards. However, we lack probabilities with the climate because it's unconfirmed. We're also in the middle of nowhere when it comes to UFOs. So at the moment, we don't really have signals either way, buy or sell, up or down, to really give us any concrete objective evidence that it's worth doing either one of those things for the time being. So we might have to wait a few days and see what happens with oil, see where it goes. Okay, so in terms of volatility, we use OVX.X and see from that we would expect a movement up or down in 1 year of 32.25%. Now, this number is getting smaller and smaller. If you've been with us for the last couple of months when we've been doing these sessions, you'll notice that the volatility for oil was just getting expected to be less and less and less as time went on. Obviously, we had a lot of volatility earlier on in the year with oil, which contributed to those higher numbers. But again, not surprising that the expected volatility is less. We haven't really seen oil do very much recently, and so not surprising that that number is getting smaller. Now, what we would expect in a day, once we reverse engineer that number, is that we would see oil move up or down in 1 day of 0.87 points, in a week 1.91 points, and in a month 3.98 points. Again, either up or down. Okay, so that's oil. Next market is gold. So we're looking at GC. That's the continuous futures contract once again for gold at GC. Okay. Once again, just going to move it a little bit. So down here, we see a confirmed downwards climate. So we have a thick red dot, which tells us we have a downwards climate, confirmed downwards trend, and probabilities to the downside. Closest stack of buy orders is here, 1836.7 to 1825.9. And closest stack of sell orders is 2039.7 to 2060.8. That's actually quite good today, because we've got an example of each of the climates that we can have: confirmed up, confirmed down, unconfirmed up. So one of each today. So we saw here on the gold chart that we have a confirmed downwards climate. Now, normally gold would go down for 5 candles in a row, and we're on candle number 4. So again, we have statistical probabilities that it's likely to continue to the downside at least for another day. Again, that's not to say we won't surpass it or that it won't turn today. Things fall outside of probabilities. But again, as far as statistical advantage, we have statistical likelihood that we will continue to see a move to the downside at least for another day there with gold. Okay, so in terms of volatility with gold, we look at GVZ.X or GVZ.X, and we expect a movement up or down in 1 year of 23.86%, which means in a day, a movement up or down of 29.1 points, in a week, 61.1 points, and in a month, 133.3 points, either up or down. Okay, so that's gold. Last market we're going to look at now is the euro dollar. So that's the spot forex for the euro versus the US dollar as a currency pair. Again, I'm just going to move, might scrunch it a little bit. There you go, so we can see what we need to see. Okay, so on the bottom here, we have a thin red dot. So unconfirmed downwards climate. It's red, so it's showing us that we have a little bit of a push to the downside, but it's unconfirmed, meaning we have no probabilities really. Now, when it comes to stacks of orders, closest buy orders are here, 1.1597, 1.1597 to 1.1507. Closest stack of sell orders here, 1.2344 to 1.2414. Just rounded those where they need to go to the closest pip. Now we can see here we do have a bunch of buy orders on top of each other, big stacks of orders, one after another, and they've continued to push price upwards. We see on this one, price came into our buy UFO, hit the buy UFO, went up, came back down, hit the buy UFO again, and then went up from there. So these buy UFOs are doing what we expect them to do, which is pushing price upwards, because we expect there to be buy orders there. Of course, if we have more buy orders than sell orders, tends to push price to the upside. Or it does push price to the upside. So that's what we see happen there with our buy UFOs. Now, obviously, at the moment, price is just sort of stabilized a little bit here, not really going anywhere. And we see that reflected in the climate, showing us an unconfirmed climate. So it'll be interesting to see if we come down, hit this buy UFO and go up, or if we go up, hit this sell UFO and come down. So we will see. Time will tell. So we see here unconfirmed downwards climate. Now, normally a move to the downside would happen for 5 candles, and we're on candle number 2. So if it does continue to the downside, we're likely for that to happen for the next 3 days or so. Now, again, bear in mind, we lack probabilities with our climate. So again, lack probabilities of it really continuing. So again, we'll see. Now, when it comes to volatility with the euro, we look at EVZ.X or EVZ.X, and we expect a movement up or down in 1 year of 8.20%, which means in a day, a movement up or down of 61 pips, in a week, up or down of 131 pips, and in a month, a movement up or down of 280 pips. So again, we're using statistics here and probabilities to let us know with volatility how far we can expect these prices to move of these particular markets within these given period of time. We use technology to help us figure out in which direction they're likely to go for, and for how long we're likely to see that movement happen. And the nearest UFOs, once again, using technology to help us figure out where price might be likely to turn. So again, we're using technology, probabilities, and statistics all to put as many odds in our favor as possible. Again, just because something is likely does not mean it is guaranteed. So we, of course, need to manage our risk as well, just in case we're wrong. That can happen. Okay, so this is direct forces. What we're looking at here is all direct forces. It's buy orders and sell orders. So what I mean by that is the most direct thing that can make price go up or down are buy orders and sell orders. That's it. That's all we have. Now, of course, there can be many reasons as to why there are buy and sell orders, and we need to be aware of that. Orders that might come into the market and cause things to change and be unexpected. So one of the major indirect forces we can look at is news. So we look at fxstreet.com/economic-calendar. And on there, we filter by high impact news and by US markets. Now, of course, you might trade outside the US. You might want to look at news that has lower impact. So you can go to that link and play about with the filters there and change what you want to see so it fits your trade plan a bit better. In terms of for this week, the high impact news that we have, nothing till tomorrow. So we had nothing yesterday, nothing today, nothing on Friday. It will just be tomorrow and Thursday that we'll see high impact news come out. We see on the left-hand side the time that it's likely to come out. Sometimes, obviously, it's a little bit before, a little bit after if a report is delayed, but it's roughly the time it's going to come out in Eastern Standard Time. Once the report does come out or the numbers come out, usually we'll see the data filled in this column. Obviously, at the moment, it's blank because it hasn't happened yet. We don't know what it is. And again, bear in mind, these are scheduled reports that are likely to come out. Of course, sometimes things happen. We know in the world in which we're in, sometimes things happen unexpectedly. So be aware of those things as well. Manage your risk always, but just be aware of these scheduled reports that could inject some volatility into the markets there. Okay, so that's us for today in terms of the data we need to go through. So just a reminder then, for you guys that want to expand a little bit more, understand a bit more about what we do, participate in our futures, options, stocks, investing, sharpening, psychology sessions with the support as well, you are welcome to join us, tradewithufos.com/you-can-trade. Again, you have a 14-day free access. You can try us out for a couple of weeks first, see if it makes sense to you, and then go from there. In terms of the next class, so the trading plan class, that's something that's starting on Saturday, this Saturday, August 29th. Trade plans are something that most traders either don't have, or if they have it, they don't use it, and then wonder why that they have inconsistent results. Mainly it's because their action is inconsistent. So what trading plans allow us to do, if we create ones that make more sense to us subjectively, whilst using as objective data as we can in our method, if we can combine those things, then we're much more likely to be able to be consistent in our actions and therefore have consistent results. So that's why we do the trade plan class. So if you're interested in learning a little bit more, you can go to predictive.com/trading plans live. And at the moment, you can register for any course and choose an additional course for free. So go to the website, see which courses we do, which ones you want to do. Now, the second one needs to be of equal or lesser value than the first one that you pick. So go to the website and sort of see how you can put it together in such a way where you make the most out of that deal, most out of that offer, so you can get the most for it. If you have questions on anything, not just courses, but questions on the technology that we use or anything I've gone over today, you can email us, support@tradective.com. We're always happy to help. For those of you that are joining us from already within the Tradective channel, then we'll see you today in the stocks and investing sessions. And at 4:15 p.m. Eastern, my colleague Wayne will be coming back to look at what did happen, what went as expected, did we see any unexpected movements, what can we learn from it before we move on with our trading for tomorrow. So we'll see you in those sessions. Otherwise, I'll be back tomorrow morning to go over the pre-market overview again for tomorrow. So I hope you guys have a great Tuesday, have a great trading day. Hope the markets treat you nicely.